Hello, Gregor.
Yes, hello, Dale. Can you
It's
see
very
me?
nice to meet you, Gregor. I think it's the first time you and I have ever spoken together. I've seen
Yes,
your work on. I've seen your
yes,
stuff. I go and I look at your wave projections every once in a while on FX Street. I want to congratulate you for winning the trophy for best sell side contributor.
yeah, thank you very much. It's been time. We were trying this very hard for the last couple of years, so we finally get it. It seems that we have more and more clients and regular visitors and readers that support us. So it's
Well,
very nice.
yeah, Donald Trump would take the victory. You finished high in the polls. So I'm hearing chants like Gregor Horvat for president of the United States. Are you ready to take that on?
Yeah, I don't know. It's a tough job.
Tough job. So
Yeah.
I'd like to, if you have a little bit of time today, the most difficult part of the journey, Gregor, is when people first start out in the business. So maybe you could tell the community how it began for you, what was the catalyst for you becoming a trader, how you gravitated towards Elliott as being your technical discipline,
Yeah.
who influenced you, obviously, who were your teachers in Elliott? Did you just take R.N. Elliott's book and learn yourself, self-taught Elliottian, or did you have mentors yourself?
Actually, I started with FX for the first time I heard for it. It was probably 10 years back or so. I was actually doing some jobs, some other jobs in the office. I was writing some administrative stuff, but the friend of mine was actually trading at that time, so I didn't know what actually he's doing back then. But I was getting more and more interested into this. So actually, he gave me some guidance how to look into the markets and some details. And actually, it was very interesting because he had some bookmarks in his Explorer, and actually I followed some of analysis, and I found that analysis from Todd Gordon. You know Todd Gordon, right?
Oh yes, yes.
Yes,
Okay.
he's very known in this wave business. So actually, back then I was just reading his articles, nothing else, and I was looking at his charts that were leveled with Fibos and Elliott waves. But back then I actually didn't know what I'm looking at. Okay, so I don't know if he knew back at that time, because it was also at start of his career. So I'm always saying, if I'm wrong with the Elliott waves labeling, then Todd Gordon's fault, because he is the guy who gave me the orientation for the markets based on Elliott.
All right. Well, you know what? I'll speak for Todd. There's always an alternate count. How
Yes,
about that?
that's true.
So as an Elliottian, you're never wrong because there's always an alternate.
Yes, it's
You might have a preferred count, but you also have alternates, right?
Yes, that's true. But it's not about Elliott wave. It's how you have approach to the markets. It's all about the interpretation. You just need to find Elliott wave so that fits your style. It doesn't. Sometimes my wave count is wrong. Okay,
Yeah.
But actually it's not about the wave count. It's about the prediction for the next movement. Okay, so for example, I am predicting wave 3, but actually it will prove to be wave C, but I will still be able to make money on this move. So it's not about the whole cycle of the Elliott wave that you need to be correct on. It's enough to be correct just on one part and be able to make money from that.
Yeah, and 3 and C's are usually fib extensions of A's or 1s, so they're money waves anyway, right?
Yes, exactly. They are probably the most traded patterns in the Elliott wave, probably the most easiest. But I always like to look also on other indicators, such as candlesticks. I love candlesticks. At the end of the day, prices is probably the most important price of the day. So, for example, if the market is up during the day, but the whole cycle is reversed at the US close, then this tells you that the bears are much stronger. So obviously,
Right.
at this stage, I will probably be more focused on the downside the next day. And if
Okay,
I
so
have
all the intraday stuff is noise, and really the most significant, most heavily weighted indicator is how you finish on the day. That's how the vote. That's a yes or no vote for an instrument.
exactly. So sometimes with the clients, we are waiting on one trade. We're tracking one price action. For example, I was personally tracking euro-dollar very closely on Friday, and if we would got a very strong sell-off, and if the week, and actually on Friday, if we'll get a very nice and strong drop, and the price would close at the end of the day and would stay very low, then probably we would continue to shorten gains today on a pullback. But
Okay, so that didn't happen. So maybe you could show us your desktop.
yes, sure.
You know the screen share. You go up to the upper left-hand corner, green box, white arrow.
Yes, I see.
And you click that. So I'm not sure I understood you. You were writing articles for FX Street before you became a trader. Is that what you said earlier in the interview? Or you were writing articles for somebody?
Yeah, I was doing for somebody else, yes, and I was contributing on a lot of places. But on the FX Street, I just stayed here because I love your website and your work, and it's really good cooperation with the FX Street stuff. So.
Okay, so we're looking at an S&P chart here. Your
yes.
conclusion is that we're close to a top up here.
Yes, here is very interesting. I'll show you the daily chart. Okay, actually, I'm looking just for the short-term top, nothing significant. So, firstly, actually, we can look on the monthly. Okay, as you know, a lot of traders were very bearish at the start of the year. As you know, you probably read about all this in media. Everyone turned bearish after very strong legs down in the first few weeks of January. But I just looked on this monthly chart back then, and actually I just have no clue how to be bearish in this. You know, we have a very clear bullish cycle. If you're familiar with the Elliott wave, which I believe you are, then you know that this was clearly a nice three-wave pullback. Okay, here in a monthly level, we are also above this support line, so you just must stay with the trend with this cycle because it's just so strong that I don't see a reason why would you fight this. You know when the market turns, it will turn only once. Okay, but continuations will occur over and over again within one cycle. So that's just my interpretation that you always need to stay with the trend. It's very simple. So actually, here on daily chart, we have seen some nice break above this first trend line, but there is a second trend line resistance that could send prices slightly down into a new pullback, I guess. So I'm personally will pay attention to this pullback for potential longs. But as this thing stands right now, I just think that market is quite high here in this wave 5 of extended wave 3. So definitely, free wave retracement is welcomed for sure. As I said, this trend line is my major. It's probably the most important for this pullback that I'm anticipating.
And that comes in around 2080 or so. 2085.
Yes, around here, yes.
Okay.
2080,
So you were talking about the euro on Friday, that if it had not recovered, you would have been looking to short the euro. So what's the structure to you on the euro? I know a lot of Elliotticians are calling this whole thing in the euro a wave 4. Is it still a wave 4 or is something else going on?
Yes, it's actually when it comes to predicting a reversal or continuation patterns, you just need to look at the substructure. And if any substructure from any bottom or any high is in 3 waves, then you know it's either completed correction or it's part of a complex correction. So back here in March of 2015, low to high of August of this year, was
Right.
clearly a free wave movement. Okay, so back then I thought that this was end of a correction and that we are going straight down. But since we are just trapped here in this big consolidation of what 1,300 pips, it looks like that we are just going complex here. But probably we will turn down, I think, by the end of the year, down into this for parity. Actually, I will be looking for euro dollar to drop to 1 against 1. So
Just go to parity.
yes.
And to you, it looks like the euro should not take out 115 or so for that last count to be on your daily valid. 115, 115.50.
Actually, the real invalidation level is at 170.
Okay.
This is the top from August of 2015. But I'm looking here at 115 as very interesting resistance. You see 78.6% of this movement. Then we have clearly a corrective substructure. It's a double zigzag combination. Okay. The most important here is that we cannot count this rally up from December low as an impulsive wave. Okay. So if it's not impulse, then it's correction. So I see.
Okay, so is there any, I've talked to other Ellioticians, and what this one guy told me is that almost everything, unlike the S&Ps like you showed earlier, that because it's a conflict between central bankers, that almost everything in FX is corrective. Majority of waves are corrective. Rather than impulsive. Do you disagree with that?
Actually, if you take a look on dollar CAD, then I think we should say that move to the downside is clearly impulsive on dollar CAD. So I'm not sure if all majors are in the same degree. But but based on the last few months, maybe commodity, when the euro, pound, and maybe Swiss franc will turn down against the dollar, okay, then maybe some money flows will go into CAD and Aussie to save those gains. So I think that dollar may not gain so much against the commodity currencies like it would against the euro or pound.
Okay, so the high yielders should hold up better during bouts of dollar strength. Is that what you're saying?
Yes. If we take a look
at the weakest sister, let me guess, would be cable.
Cable, yes, it could be. It could be cable because I see euro pound is in bullish mode actually. Okay, so euro is probably stronger than pound, which means that pound is the weakest when we compare everyone to dollar. So yes, cable, I think it could go lower. I can take a look on cable here. Also, recently I said that dollar CAD and crude oil. If we consider that, look where crude oil is. Okay, crude oil is turning down. Okay, and usually in normal correlations you would see dollar CAD going much higher, right? If crude oil is
and it's not happening. Yeah.
Yes, it's not happening.
Yeah.
So imagine when crude oil bottoms or slows down, then I think that dollar CAD will have no chances to rise. If it's not rising now, when it will. Okay, just connecting it with the energy markets. So that's why I think that upside on dollar CAD could be limited, and that we are turning aggressively down for the next couple of months. So regarding
all right, so that 147 was it. What are you thinking? 120 or lower?
Where on dollar CAD?
USDCAD. If you're USDCAD.
Yes.
Okay.
Do you see these charts nice?
I see it. Yeah, I see it.
Okay, you see clearly there is a 5-wave decline. You can see this top formation. It cannot be more powerful than this. When you have a strong rally like this and fully retraced in the same period, actually, if you compare current bears with the previous bulls, then for me this is a very nice example of very powerful reversal. So I just think that we will continue to the downside on dollar CAD, but we are now here at this major support at 128.30.
Yeah.
It represents the former wave 4, so I think we can see some
Right.
bounce. Maybe even bearish head and shoulders could be forming here on a big degree. Left shoulder, head, right shoulder now in play. So we'll see what happens.
I wasn't expecting to get all these great looks. How about gold? Gold's been the star of the first quarter. What are you thinking in here?
Gold, I think that gold is going higher. I'm actually, recently we talked about two different views. You have primary and alternate view, right? So here I'm looking actually at two wave counts, and I don't care which wave count is correct. To me, it's important that we focus on a one wave at a time. Okay, so it means either we will see only ABC movement to the upside or 1, 2, 3, 4, 5. In both cases, there's room for much higher levels. Notice that we broke here above this major resistance line of this downward channel, but more importantly was this ending diagonal formation. That's probably one of the most powerful patterns, and once they are finished, market will just move very sharply in the totally opposite direction, which usually happens because there are a lot of traders that will avoid those slow price action. Like here, there were some overlaps, but the bears were not so aggressive. So I think there were plenty of traders that were avoid trading this gold, and there were a few that continued to look down because the market was still bearish. But usually this then results of this is usually a very strong reaction to the completely opposite side. So also it's important to know that when diagonals are finished, you will see a reversal back to the start point of this pattern. So actually at 1345 would be my minimum upward objective for this rally. But if you see here, there's still only first leg up, right? Corrections are always in three waves. Now this clearly is only first wave. So either we will see wave C up after a pullback, or wave 3 up to much higher levels. So I think that there is an opportunity to jump into this trend for sure. Also, here on a daily chart, clearly we already have some evidences of an overlapping corrective price action. Okay, I just see this as a very nice setback that is just waiting for you to join the trend.
Right, and your wave 5 target up there is what, around 1320 or so?
100, yes, maybe, as I said here on the weekly, there's a 1345. Maybe this can be triggered. But maybe
and then you look, and then you only look for that looks like a pretty shallow pullback. You look for, after wave 1s, do you look for 50% or 61.8? Usually,
yes, but the most important are not 50% or 61.8%. The most important to me is price, and the price is identified by swings. So I will probably pay attention to fourth wave levels. Okay, let's assume that we go here, and then we get a pullback. And to me, the most important would be this low of wave 4. Okay. So this would be my first and most important evidence for a potential reversal to the upside. But obviously, in line with this, I will add Fibos as well. And if we'll see that we will be trading around 38.2% near this wave 4, this can already be enough. Okay, so to me, it's more important price rather than Fibos. I'm trying to put Fibos in the context of the price action, if you know what I'm saying. If you know what I mean.
So what would invalidate the bullish call in gold? Trading back under 1112?
Yes, true. Or maybe this, if I connect this trend line, maybe this trend line would already be first signal. But even in that case, I would probably say that wave 1 is already done and that we are already now in wave 2. Okay, so I would then adjust the wave count. So no matter what, I think that sooner or later we will see a continuation higher on gold.
Okay.
But maybe we will
go ahead, buddy.
Maybe we will now consolidate if the euro dollar will turn down, okay, from this wave C, from the 78.6%, then maybe gold could stay trapped in consolidation here.
Yeah, I was thinking one more low in euro and a higher low in gold. What do you think? We get to your parity target in euro, and gold corrects 61.8 from wherever the top is.
That would
Puts
be
in a
perfect.
higher low.
That would be perfect.
I actually thought we could trade 11.10 again, but you don't even see that in the cards again at all, do you?
Yes, actually 11.10 it's quite low here.
Okay,
or are
so
you talking about the euro?
that's off the table.
Yes, I think
Unless
yes.
you measure from 11.96 to 12.90 and we break 11.90, that could do it, right? But anyway, I'm getting the picture here that people that are looking for big pullbacks in gold shouldn't be doing so. People that are looking for big pullbacks in S&Ps shouldn't be doing so. And both the trend in gold and the S&Ps is higher. You find that unusual? A long time ago, I followed a guy named Larry Williams who said stock market rallies are healthy as long as the gold isn't going up at the same time as the market. Ever hear of anything like that? And it's not as healthy. The integrity of the rally is that it's more about nominal growth because gold is going up. So it's more about dollar weakness than it is about price appreciation, more like nominal growth.
Yes, very interesting. But actually, I have seen plenty of times those correlation going sometimes even from negative back to positive between gold
like
and
how about the yen? How about the yen weakness and how strong equities have been with U.S. dollar yen heading south?
yes, actually, this normally dollar yen should be much higher if you compare it with the stock market.
Yeah.
So actually something is wrong here. It's probably have to do with the yields because treasuries have been moving higher. Obviously, yields were lower, so I think that's the reason why we have some weakness on the dollar.
Yeah.
And
It's almost like that risk. We should have seen more risk off with the weakness. If you put the yen chart back to the compared to the S&P chart, they both declined and bottomed at the same time, with the S&Ps almost back at all-time highs, and the yen hasn't even retraced 38%. You think that's about the BOJ and central planning? I don't think the BOJ wants U.S. dollar yen to fall beneath 111. I think that's why they went to negative rates, don't you think?
Actually, I'm not so much in these fundamentals simply because I just don't trust them too much. Okay, so technically speaking, the price itself is the most important. It has all information from all of the noise from the media, from every bank, everything. It's all in one place. So no matter where any bank wants to see its currency, I think that it's all about, again, interpretation and direction of the trend. So I'm still.
So markets are bigger than central banks anyway.
Yes, I think there are any other thing. It's behind the markets. Everyone are tracking how the markets are behaving, and then they are trying to fit their, I don't know, words, whatever, statement into this price action. So they're one step behind the markets, I would say.
What a great interview, Gregor. Really a pleasure to meet you, and you edified me and Lar today. You ever
already done?
What's that?
Are we already finished?
What's that?
If we are already finished with the interview, I think.
Oh, if you want to go on, that's fine. I mainly brought you on to congratulate you. What's the best way for people to find your work, follow your work, become a subscriber, etc.?
We have actually special agreement, as you know, with the FX Street for the FX Street visitors, so they can find my work on the FX Street website, and they will be able to find every other information about my service there. So everything is there. We also, as you know, we do weekly, not weekly, monthly webinars with the FX Street visitors. So, I share my views.
I want to check to see if I have your Twitter handle correct. Is it at Gregor Horvat FX, Grega or GRE?
Yes, yes,
What
yes.
is it?
GREGAHORVAT FX.
FX.
Yes.
Got it. Okay, so people could also follow you on Twitter.
Yes, sure.
Anything you want to wrap up with? What do you think is the most important thing for people to be focused on now that we're in the second quarter of 2016?
What is the most important? The most important is to probably not to trust the current dollar weakness that we have. I just think that we will see some shifts in the trends and that we are still trapped in major consolidation on euro dollar, which makes me think that this whole major trend, bearish trend on euro, is not done yet. So
It
just
hasn't
don't,
it
yes,
hasn't ended yet.
yes, just don't fall in love too much with current bulls
So
on euro.
the dollar index maybe between 94 and 92 is going to be a good buying opportunity because a lot of waivers are saying it's incomplete. We need a wave 5 in the Dixie, maybe up towards 102, 104, or something like that.
Yes, actually, I will show you the next chart now. I'll look on the monthly. Okay, now here's a very interesting chart. Now notice that here each decline, let's go back to 2002 and down to 2004. It was 24 months, very strong bearish impulsive wave. Okay, and after 24 months, we have seen move into consolidation phase. Then we have seen another strong decline, another strong leg down that was 27 months. And then market turned, okay? And now when I measured it from here, from May of 2014, when dollar turned higher, and the euro dollar down, I measured and 24 or 27 months, and I came out with a prediction that till July 2016 we could see higher levels here. From April to July, obviously April is now, so we have what, 3-4 months left for push higher here up in wave 5. And also here we have this 61.8% retracement, very important level, and from an Elliott wave perspective, we are clearly consolidating here. You can see very strong move up and then just a slow price action. Clearly that's just a pose with an uptrend. So
so if you're a super bear and you're viewing this as corrective to 105, and A was from 122 to say 72, that from 105 you should be expecting new lows.
From 105 I would be expecting a turning point.
50, yes, 50. Down to the first from 122 to 72 was 50. So from 105, if it's equal to, would be $55 index.
Yes,
right?
Yes, that's true. But again, to me that's not the most important looking so much into the future. The most important to me is that it will not be a time to be long dollar when the price reaches around 103 to 105. It's probably time to look on the other side. Maybe just for a temporary pullback to the downside with free waves or even impulsive waves. I don't care at this stage. The important is that I see limited upside coming into this year and that we'll see a reversal. And then when this reversal occurs, there will be opportunities to look for dollar weakness.
Okay, so, well, if the time window that you have up is correct, and it's say June, July, the dollar is going to peak right into the political conventions in July of this year in the U.S.
Well, that's even more interesting then, right?
How about that? Donald Trump or whoever gets the nomination, the dollar peaks on the Republican convention in July.
Yes, but actually I'm not familiar with the cycles, with the trend dollar cycles compared to the this presidential election. So I'm just not sure how if this really is impacting the markets, or it's just some temporary reaction that don't last long.
Well, if Trump is elected, it'd be like Smoot-Hawley 2.0, 30% tariffs against China, all-out trade war. Can't see that being bullish for the dollar. So, okay, what a great interview. I mean, I know what to do in almost every market you showed me for the rest of the year. I don't even need to talk to you anymore.
Okay, so hope you will make some money then.
I'm gonna be sitting on the island, and I'm gonna give all credit and validation to our conversation today. What a great thing! Now I know why you won, Gregor.
Okay, good.
And you have a lot of conviction. I could tell you have conviction, belief in your work and what you're seeing ahead of time. Isn't it nice to be able to kind of view into the future so you can prepare yourself to take action when the market is entering critical time zones for you?
Sure, of course.
Okay. Well, what did you do? Did you get a trophy from FX Street? And where did you put your award? On your website?
On my website, of course, so that other viewers can see how good we are, and that we promote the FX Street website as well.
Okay, buddy. Well, really nice meeting you, and thank you for all your views that you shared with us for free.
Yeah, thank you for inviting me on your interview, and hope that we will have a new one maybe next year when we won again.
There you go. There's confidence. Everyone, you've listened to, and why don't we give Gregor a large thank you and a congratulations for winning Best Sell Side Analysis on the FX3 2015 awards, and follow Gregor's Elliott work. It's top shelf. It's elite. So thanks again, buddy. Good hunting. May pips rain down on you and your customers for the remainder of the year.
Thank you very much.